Good morning. I'm Jason Marzak, Vice President and Senior Director at the Atlantic Council's and its Adrian Arch Latin America Center. I'd like to personally welcome all of you joining us virtually, as well as those who are here in person for a very important day, including welcoming those of you who traveled here from the Caribbean to be with us today. Today we're here with a shared goal to come away with concrete solutions to further strengthening financial inclusion in the Caribbean. For those watching virtually, we're coming to you live from the Inter-American Development Bank headquarters here in Washington, D.C. So I'd like to first thank our friends at the IDB for hosting us today and for their generous contribution to the organization of today's day-long forum. The relationship of the Atlantic Council to the IDB goes back to the founding of our regional work a decade ago. In fact, just last week, I was here in this very room for the IDB's incredibly successful Responsible Investment Forum alongside the Americas Partnership Summit. I'd like to give a personal thanks to the IDB's General Manager of the Caribbean, Anton Edmonds, Henry Mooney, who helped with the organization of the forum and was a member of our Financial Inclusion Task Force back in 2021, and of course to Executive Director of the Caribbean, Robert LaHunt. It's a real privilege to work with each of you. I'd like to also thank our other partners and sponsors of this forum, Republic Bank, that is represented today by Baldeth Ramkusan and Fidela Davis, and the Caribbean Association of Banks, represented by Wendy Delmar, who has been one of our main partners on our financial inclusion work for now almost 3 years. Thank you for your support. And of course, to the Atlantic Council's Geo-Economic Center for its partnership in this forum and other events. I'd like to also recognize the ambassadors in the room today. Ambassador Lynch from Barbados, Ambassador Jones from the Bahamas. It was great to visit both of your countries in the last year. Ambassador Hines from Guyana. The Atlantic Council will be in Guyana next week for our PAC 2030 events and our Caribbean Gender Empowerment Forum with UN Women, as well as Ambassador Martin from Suriname. Your country is hopefully coming up soon next year. But thank you all for joining us. I'd also like to recognize how honored we are that the Central Bank Governor of Trinidad and Tobago, Dr. Alvin Harry, will be joining us too. As well, you'll hear from a moment from Congressman Espaillat, and we're also joined by one of our board members, Melanie Chen from the Atlantic Council. Today's forum comes against the backdrop of several challenges facing the Caribbean. Climate change, energy, and food insecurity, and rising crime and violence are making regional and international headlines. But flying under the radar screen has been financial de-risking and its effects on regional economic development. The effects are potentially devastating and can severely limit economic growth. As we show across our two reports, where you can find on the Caribbean Initiative website, correspondent relations for most Caribbean countries have dropped more than 25%. And this has had effects on the region's tourism industry, the remittance sector, and access to foreign trade and investment. Fortunately, we're starting to see developments and momentum around these issues. Commitment from several members of the U.S. Congress, leaders across the Caribbean, as well as the U.S. government. Today, we will look to build on this momentum. As part of the forum, not only will we have this opening public session, but we will also have 2 private workshops on technical assistance and the creation of a regional clearinghouse. By the end of the forum, I hope that we come away with quantifiable steps and marching orders that lead to further action that is critical right now and today. For that, I'm excited to have a number of experts in the room across the U.S. government, the Caribbean, and of course institutions like here at the IDB. Before we begin our conversation, I think it's important to contextualize how we got here. Today's banking forum is the culmination of almost 3 years of work with partners from the Caribbean, the United States, and the IDB, among others. In 2021, we launched a Financial Inclusion Task Force that included a group of bankers, regulators, and policy and technical experts to look at the causes, effects, and potential solutions to address financial de-risking in the Caribbean. This is one of our first efforts as a Caribbean initiative. Again, with support from Atlantic Council board member Melanie Chen, we understood that if countries do not have access to the global financial system because of financial de-risking, addressing issues such as climate change, energy, among other challenges, is much more difficult. Understanding the urgency of the moment, our task force produced a groundbreaking report titled Financial De-Risking in the Caribbean, the U.S. Implications of What Needs to Be Done. The report outlined tangible and concrete recommendations to address financial de-risking. In fact, one of the recommendations was the importance of creating a U.S. Caribbean banking forum. So I'm so excited today that we're acting on one of those recommendations. Of course, everything that we do at the Atlantic Council is about impact. Since the report, we traveled with a congressional delegation to Barbados to present these recommendations to 9 heads of state and government in the Caribbean, where we were so pleased at the culmination of that forum that Prime Minister Motley commented about the importance of our work and helping to inform the discussions. As well, task force members have provided congressional testimony, and we've also launched a second publication, The Importance of Defining Correspondent Banking as a Public Good. That publication just came out recently. Again, all of that has led to today, where we'll begin by looking at how addressing financial de-risking can shape the next decade of regional economic development. I'm delighted to begin our discussion to have with us today Congressman Adriano Espaillat, who has served New York's 13th congressional district since 2017. He is the first Dominican American to serve in the House and is a champion day in and day out of deeper U.S. Caribbean ties. I know that firsthand from the work we've done together. So please join me in welcoming to the stage Congressman Espaillat.
Good morning. Thank you so much. I want to thank the Atlantic Council for hosting you this morning, as well as the Caribbean Association of Banks and the IDB, and also welcome those representatives, those ambassadors, and those representatives from the Caribbean nations. The Caribbean continues to be our third border here in the United States. I represent the 13th District, which is an iconic district. Prior to me coming to Congress 7 years ago, it has only been represented by 2 members of Congress in 75 years. The late and great Adam Clayton Powell, some of you may know of him or his legacy, a true champion who still holds a legislative record in the U.S. Congress. And of course, the Lion of Lenox Avenue, Charles B. Rangel, who spent 46 years in the U.S. House of Representatives and was the chairman of the Ways and Means Committee. So this is an iconic district that has Harlem, which is the capital of the African diaspora worldwide. It has East Harlem, El Barrio, which is the launching pad of the Latino experience in the Northeast, and then it has Washington Heights. Some of you may have seen the movie In the Heights, and a little bit of the Northwest Bronx. So it is a very diverse district. It has people from all over the world, from Senegal, from West Africa, from Albania, from Vietnam, Russian Jews, German Jews, Dominicans, Puerto Ricans, African Americans. It really has people from all over the world. It is a global district, and as such, it brings to my desk issues that pertain to not just the hemisphere, but in particular, the Caribbean. And as I was said earlier, I am originally from the Dominican Republic. I feel very strongly that the United States has sort of like turned its head for far too long and not looked at Caribbean issues, and we wander around the world, and we lost our footing and our leadership in the hemisphere, and we must retake that. We have great opportunities to do that. I think the pandemic revealed to us what we really already knew, which is that the supply chain should be closer to our hemisphere, and that production, in many ways, and economic activity in our hemisphere provides great opportunities, and we must be able to set in motion the mechanism to allow that to happen. In other ways, also, climate change has disproportionately hurt our hemisphere, particularly island nations in the Caribbean. So I participated in the COP27 in Egypt and saw firsthand how island nations are disproportionately hurt by climate change. And climate change is a dynamic where those that contribute less are hurt more. And so we must work for mitigation and adaptation. And the United States must also fulfill its commitment to be a global leader in those initiatives that will address climate change short-term and long-term. But as it pertains to this discussion, access to financing continues to be a major challenge. And we see how nations in the Caribbean and in the hemisphere continue to incur in debt, and how their debt service proportion of their budgets continue to grow, and how in some cases it may even hurt their credit rating. And so we must address that. We must streamline the process, make it easier for those nations to access financing. Easier and more flexible terms, that's the reality, right? We cannot load those countries, saddle them with a debt service that will break their back. We must facilitate their transition. And those nations that are doing better financially, like the Dominican Republic, they also should have access to finance, because they could be perhaps the leaders of the transformation in the region. And so we have several pieces of legislation that I think are critical. One is the piece of legislation that I introduced, Las Americas Energy Security Act, which will provide access to financing for energy-related initiatives. We also have the opportunity in the Americas Act, which is one that will foster nearshoring opportunities for the hemisphere. I think that's important. Nearshoring, or friendly shoring, as you may call it, I think is a great also opportunity for the hemisphere. And we have also the bill submitted by Senator Cassidy, which is a bipartisan bill, which is still being discussed, and it's called the Americas Act, which will also foster nearshoring opportunities for the hemisphere. In addition to that, security continues to be a major problem in the region, in the Caribbean. And as you know, we have the Caribbean Basin Security Initiative, which provides funding for certain nations in the Caribbean. I am a chief sponsor of that bill to increase funding opportunities to combat drug trafficking, to ensure that we have greater security in the region. So these are all initiatives that are moving forward. But as you know, the world is in a very uncertain times. And as we face the crisis in Israel, in the Ukraine, our own very complex crisis in the border, we must make sure that we don't lose sight of some of the issues impacting the hemisphere, and that they don't fall off the table. So your voices are critical, and of critical importance to ensure that that happens, that during these uncertain times, we are again not forgotten, and that the Western Hemisphere, and particularly our third border, which is the Caribbean, is never forgotten. Thank you so much for being part of this discussion, and I hope that you have not just a wonderful day, but a productive day in looking for solutions to these pending problems. God bless you and keep the faith. Thank you.
Thank you so much, Congressman. I think excellent comment. During these uncertain times that we are not forgotten. Now it's my pleasure to introduce a 5-minute video from Director General of the Organization of Eastern Caribbean States, Dr. Didicus Jules. We first met Dr. Jules in St. Lucia last year, and our partnership remains strong to advance financial inclusion in the Caribbean. After the video from Dr. Jules, we'll then have our panel discussion come to the stage, moderated by Wasim Molla, Associate Director of our Caribbean Initiative. Please.
Distinguished members of the Atlantic Council, the Caribbean Association of Banks, and the IDB, esteemed guests and advocates of inclusive growth, ladies and gentlemen, I bring you greetings from the Eastern Caribbean and thank you for the privilege to address this distinguished audience on a matter of critical importance, not just to the Caribbean, but to the global community, and that is strengthening financial inclusion through the robust support of development and financial institutions. The Caribbean is a region of historical and cultural paradoxes. Caribbean economies often exhibit a paradox of abundant cultural and natural wealth, juxtaposed with economic vulnerability due to small market sizes, susceptibility to natural disasters, and dependence on a narrow range of sectors such as tourism and agriculture. Despite their rich resources and potential for growth, they face persistent challenges in achieving sustainable economic development and diversification. Like many emerging markets, the region faces unique challenges, challenges that are compounded by the vulnerabilities inherent in small island developing states. One such challenge is financial inclusion. Financial inclusion, the availability and equality of opportunities to access financial services, is foundational to building both personal and national resilience. It marks the difference between poverty and prosperity. It serves as a bridge between economicity and outcome. Yet, according to the World Bank, only about 50% of Caribbean adults have a bank account, a basic indicator of financial inclusion. And the numbers are far less encouraging when we delve deeper into access to credit, insurance, and investment products. The OECS Commission and the Eastern Caribbean Central Bank recently jointly commissioned a survey of financial literacy and financial inclusion through the World Bank's Caribbean Digital Transformation Project that involves 7,037 individuals 18 years and older in the Economic Union, and some of the conclusions punctuate the critical need for grassroots action on financial inclusion. Keeping their heads above the rising waters of financial difficulty will involve a range of survival strategies, from spending less, doing without, delaying expenditure, dipping into savings, working overtime, or selling an asset. All these were revealed by the survey. It also reveals that over half of the individuals in the Eastern Caribbean Currency Union indicated that they were not able to meet their living costs in the past 12 months, and that 44% will not be able to face a major expense today without borrowing from a financial institution or from family or friends. Ladies and gentlemen, the case for strengthening financial inclusion in the Caribbean is unquestionable. Financial inclusion is both a catalyst for reducing poverty and a milestone for achieving equitable economic growth. When people have access to financial services, they are better equipped to manage risk, to absorb shocks, and to invest in their futures through education and entrepreneurship. In the broader scope, financial inclusion fosters a more inclusive economy and drives sustainable economic growth. The question then is, what is needed at the international, regional, and national levels to support this goal? Firstly, we must recognize the essential role of development and financial institutions. These institutions ought to be the architects of change, the conduits through which resources flow to the areas they are needed most. They can develop financial products tailored to the unique needs of Caribbean nations and can provide the necessary capital for innovation and development projects. However, these institutions require unwavering support from international partners and stakeholders. Only a couple weeks ago, we celebrated in St. Lucia, for example, the 85th anniversary of the First National Bank of St. Lucia, originally nicknamed the Penny Bank, because it opened the door to financial inclusion to the racially, economically, and politically marginalized in the torrid heat of anti-colonial protests of the 1930s. And this institution today has become a billion-dollar financial institution that still leads the struggle for financial inclusion in the financial plantation of the 21st century. Secondly, We must invest in technology. The digital revolution offers unprecedented opportunities to leapfrog traditional barriers to financial access. In the Caribbean, mobile phone penetration is high, over 2 to 1. But access to digital financial services lags. We can bridge this gap, and we can do this by supporting the digitization of financial services. We can empower people to participate in the economy on a more equal footing. Thirdly, we must focus on financial literacy and education. It is not enough to merely provide financial services, but we must also ensure that people have the knowledge and the tools to use these services effectively. This empowers individuals to make informed decisions about their finances, leading to better outcomes for their households and communities.
Thank you, Dr. Jules, for those brief pre-recorded remarks. Sorry that you can't join us today, but we know that we'll probably be back in the Caribbean soon, also talking about these issues. Also like to thank Jason for his opening remarks, and of course Congressman Espaillat for those introductory remarks as well, and of course Melanie Chen, Atlantic Council Board Member, for being with us today. As Jason mentioned, today's banking forum is a culmination of multiple years of work and efforts, not just from the Atlantic Council, but more importantly from our partners in the Caribbean, in the development space, and of course across the United States as well. And I'm so excited that we have many of those partners, not just here in the audience today, participating later in the program in the private workshops, but on stage with me as well. First, directly to my left, we have Executive Director of the Caribbean at the IDB, Robert LaHunt. Robert LaHunt has years of experience, not just in government, but in financial institutions, and has just been a great partner for the Caribbean Initiative and the Atlantic Council over the past couple of years. Joining us also is Baldath Ramkasoon, who is the Chief Risk Officer at Republic Bank in Trinidad and Tobago. Baldath was also a member of our Financial Inclusion Task Force back in 2021 and has since remained an active partner for us in the region. Then we also have Wendy Delmar, who is the CEO of the Caribbean Association of Banks and was also a task force member and also participated in the congressional testimony last year, September, with Prime Minister Mia Mottley. Wendy, thank you so much for being a friend of the Atlantic Council and the Caribbean Initiative and for all of your efforts. And then finally, we are joined by Patrick Hugh, who is a senior policy advisor with responsibilities for financial sector de-risking at the U.S. Department of Treasury. Patrick, thank you so much. I know it's been chaotic getting here, but really happy to have you here. And the partnership with Treasury has just been amazing, and we're looking forward to working together in the future. So for today's discussion, we'll talk a little bit about some of the challenges, of course, on financial de-risking, but really we want to get to not just the crux of the problem, but the solutions. As Jason mentioned, how we got here, we spent a lot of time talking about the challenges. We put out 2 reports, all of us together. We've had numerous public events, private events on this, but today's banking forum really is about getting to the solution. So, I want to go quickly down the line, starting with you, Director LaHunt, and, why is the launch of this U.S. Caribbean Banking Forum so important? And, from your perspective, what are you looking and what are you hoping that we are going to achieve by the end of the day?
Well, again, thank you. Thank you very much. And let me apologize for the fact that I have a bad cold. And I actually have been traveling for the past 24 hours. So I ran straight from the airport here. So if you hear me sounding a little nasal, it's because I do feel nasal. From the IDB perspective, the IDB's mission, let's go back. The IDB's mission is about eliminating poverty and reducing inequality in our region. In pursuing this mission, the bank confronts complex and expensive challenges head-on. One of the paramount issues that the countries of the Caribbean region face, as we all know, is climate change, with severe consequences for our environment, economies, and societies. To mitigate these efforts and promote a sustainable future, the IDB is dedicated to investing in sustainable infrastructure. However, let's not underestimate the cost and complexity of doing these things. One thing we have learned is that there's very little that you could do without money. According to the IDB estimates, You are talking about spending by the year 2030 somewhere between $470 billion and $1.3 trillion. The reality is also that spending of that money to fix this problem cannot happen as a result of debt from our countries. So we need an active and we need to have an enabling environment for the private sector. So this conference and this conversation about de-risking needs to be brought into that context. At the end of the day, we cannot move forward if we do not have an environment that facilitates private sector involvement to fix the large infrastructure gap that we face in the region. Very simple. And if we carry that to the next step, you cannot have an enabling environment for the private sector if you lack correspondent banking relationships. So this is a critical element, and as you know, the IDB as an institution, where there are critical things in the region, we seem to get drawn towards it. And therefore, we have decided, and I mean, we are looking forward to discussing this and actually trying, as you said before, this matter has been outstanding for a very long time. I remember way back in 2009 being the president of the Forerunner Institution, the Caribbean Association of Indigenous Banks. And this was a serious discussion way back then. I am back here now close to 25 years or 15 years afterwards, and I'm still discussing it. So we really need to have some concrete solutions, and I hope at the end of the day we would be able to get to that point of putting concrete solutions to fix the problem. I will elaborate further.
No, I think completely agree, and that's exactly why this forum is so important. We need concrete solutions, and don't mind your cold. It just shows your commitment to still being here 15 years later, making sure that we have a solution. Wendy, want to go to you. You've been integral in the organization of not just this forum, but our work since we began. I really would love to hear from you. What do you want to take away from this forum? What are those tangible solutions that we really need to come away with?
Well, again, thank you so much. I'm really pleased to see the level of collaboration that it took to bring this forum to reality today, because like my previous speaker has said, this is a problem long in the making, and hopefully in the shortest possible time frame, we would have some concrete steps in terms of what the next steps can and should be to ensure that the Caribbean truly has a deserved place in the global discussions. Certainly from my perspective, we are, like we said, not going to discuss again the inherent issues faced by financial exclusion, which essentially is what the de-risking activity has led to. But we want to see a greater sense of collaboration. We definitely need to see a heightened sense of transparency, because we are getting very different perspectives on why the approach of de-risking has been the chosen medium. So in that regard, we now need to talk about legacy. We need to talk about a legacy of problem solving. In our discussions, what has come to the fore in more instances than one is that the Caribbean islands do not produce the volumes that create a profitable space for international banks or correspondent banks to continue their operations. And so one of the things that we would like to position today is the opportunity to look at an aggregator approach, which solves the issue of volumes, but also, more importantly, gives the Caribbean the opportunity to recognize any inherent or systemic weaknesses within our operations, so that we can be part of the solution, the cure, and take this discussion forward. So that really is what we want to see, a legacy solution to a way too long issue that has been a thorn in the sides of the operations of the Caribbean region.
Thank you, Wendy. And on that aggregator approach, this idea of creating a regional facility is something that will be the main topic of our second private workshop later today. So hopefully we will come to some sort of resolution, come to some sort of next step. Baldath, I want to come to you. I mean, you have a unique perspective from Republic Bank being in the region, and you've participated in other public discussions as well with us. And you've always had some great ideas. We'd love to hear from your perspective, from Republic Bank's perspective. What do you hope that we can achieve by the end of the day?
Good morning, all. And I think this forum is a very important forum. It is actually very pleasing, like Robert, who has participated, well over 10, 15 years. I think today is quite important, having participated in sessions like these. I have the sense of confidence that action is going to come out of it. I feel confident about that with key stakeholders. Like Wendy said, it is about collaboration, but it is about a focused effort on really getting to the heart of the issue, whether it's a compliance-related issue, whether it's a revenue-related issue. And Republic Bank is actually pleased to propose to be part of that solution if it's on the revenue side as an aggregator. So that's one of the things that we want to ventilate, to get the ideas, to get the feedback, and it's with a mind of problem solving and trying to make this work. The other part of it is about the stakeholders and the dialogues and the communication and building that transparency and partnering. So those are really kind of be two of the things that we want to really elaborate on and take away as we move forward, because we recognize that incrementally or with huge spurts, we can get there. It is about that traction to make it happen.
Thanks, Baldat. And Patrick, want to go to you. I have the feeling that from U.S. Treasury, you're going to be the most popular guy in the room today. So want to turn to you and get some of your thoughts from the U.S. Treasury perspective. This is something we've engaged with your colleagues about for a couple of years now. Seeing this U.S. Caribbean Banking Forum come to life, what do you hope we can get out of it, and what might be some of the next steps to engage with some of the partners and banks that we have here today?
Yeah, no, thank you, Waz. I just want to echo all my co-panelists and their remarks, and Jason as well. I mean, we know that there is an issue, and I just want to reiterate that this is a high priority of the U.S. Treasury Department, but higher up, the Biden-Harris administration. I mean, this is a priority for them. So just want to reiterate that commitment. I think what's really important about forums like this and ongoing dialogues is getting to the solutions, right? And this is the launch of a forum. We'll have many more meetings. But again, it's to come together, to exchange ideas, and to address the issue. So I think that's the most important part of this, finding those solutions, as we all heard. I just want to also reiterate, from the Treasury perspective, we have been working on financial inclusion and de-risking for a number of years. But we did release a de-risking strategy for the first time ever earlier this year. If you haven't seen, it's quite comprehensive, and we actually did look at correspondent banking relationships as one of those customer sort of relationships that have been de-risked. And this is very important to Treasury. We looked at it, and engaging in forums like this will just only solidify those findings, but also the next step, right? What can we do to actually mitigate those solutions? And actually, in our de-risking strategy, we did even say for some regions like the Caribbean, we specifically said the Caribbean and the Pacific regions, we have noticed these trends. This is a problem, and here are some potential solutions. I think what's also important is, I think, for my part of Treasury, we work on the money laundering and terrorist financing aspects of the financial system. We are seeing progress in the Caribbean region across the board, and I think that's really important to highlight. I think Don is here from CFATF. We work together a lot on financial AML-CFT policies and how jurisdictions are doing with incorporating an effective system. But the Caribbean region has been doing tremendous progress. We have seen that over the last few years, so I think that's also really important to highlight. Again, that's just our part of Treasury. We focus on that a lot. But I think that's something to bring to the table, because when correspondent banks look at relationships, when they look at jurisdictions, they take that to account, right? How well are jurisdictions effective at combating illicit finance? So I think that's another area that we want to highlight.
Perfect, and that's a great segue into what we need to talk about now in the remaining sort of 20-odd minutes. Is yes, there has been progress, but we've also heard from our other distinguished panelists that there are still challenges there. So maybe we can turn to that, right? What are some of those specific solutions that we want to throw out there that we're going to talk about here, but also later on in the day? And where there has been progress, how do you replicate that progress? How do you build on that progress? Because there can no longer be, in Wendy's terms, financial exclusion in the region. So Director LaHunt, I want to go to you. I know that you have an interesting idea that you'd like to share with us. So as we think about the banking forum and we think about the people that we have in the room, we'd love to hear your thoughts on what a potential solution can look like, but also what are the resources and efforts that are needed to make these solutions actually happen?
You know, I will start with the latter question, just to get that out to you. You know, I just came from another speech, and I remember utilizing this quote. I must say I didn't come up with it myself, and it's a popular one. One of my counselors from Jamaica gave it to me. You know, and she was quoting in my speech Charles Dickens. You know, it was the best of time, it was the worst of time. It was the spring of hope, it was the winter of despair. I mean, the reality is, let's start by saying, right, we are not trying to put someone up on the moon. We are not wanting to launch somebody into Mars. This is a problem that we could fix. You know, the world has the ability to fix a number of problems. We have a lot of bright people around, all right? And therefore, if we want to fix something, it's just about a will. Simple. So we want to fix this. We really don't need to take another 12 years to fix it. We just need to decide that we want to fix it, and it will get fixed. So I have been looking at this problem myself. As I said, some people, I mean, I remember, I realized that I'm getting a little old when I remember people like Baldat being my trainee in the bank. And now he's the GM here on the stage with me. I'm saying, wow, something is happening. But, you know, when I looked at this problem, and I'm going back in a little bit in history, I would have highlighted before the need for creating an enabling environment for the private sector investment and participation. In my experience, correspondent banking is, as we all know, a critical element in creating this environment and in the ease of doing business. Correspondent banking, as we know, is a lifeline for many economies and has faced significant challenges due to the perceived risk with anti-monitoring AML fines. And I'm glad to hear what you are seeing, because the risk is a perceived risk. It is not a real risk, it's a perceived risk. We have seen the fallout in international banking withdrew from these vital services, disrupting financial stability in our region. You know, while I was the treasurer of Republic Bank in Trinidad, and this is way back in the early 2000s, I witnessed the active pursuit of correspondent banking relationship by international institutions. At that time, always at my door was Barclays, Wells Fargo, Union Bank. Everyone wanted my business. Everyone was knocking at my door. It was the same volumes that we talk about that we need to aggregate, that we seem to think is the problem. That is not the problem, because it was the same volumes. As a matter of fact, the volumes were less, but they wanted my business. What happened? Well, what happened is that money laundering came, and the judiciary started to place some heavy fines on people. And those fines resulted in someone saying, listen, this is no longer, let's understand what these banks are saying. It is not that the banks, this business is not profitable. It is profitable. However, there is something in, when I was at Treasury called, what's it, value at risk, right, Baldat? When you take the risk and your returns, but you multiply it by the return by the risk, and then you end up with a negative number. The reality is the business is profitable. However, with this hatchet that is over their heads, this perceived risk that one day they could be charged, and if they are charged and they get a fine, what will happen? And therefore, all the money that they would have made will not be able. That, therein lies the problem. So I agree, we want to aggregate and get more volumes. The small volumes will work. The problem why they exited the market is the heavy fines, which placed undue burden on them. And as a matter of fact, I was having some conversations with some of them about these fines. Recently, the guy who is in charge of the World Bank Insurance Company, he was a correspondent banker. And he says, you know, what you're saying there makes sense, because I remember when this happened, well, there were some problems in Mexico. And therefore, we said Latin America and the Caribbean, and problems in Mexico, that's the Caribbean. So even when they exited, it wasn't the Caribbean that they were concerned about, you know, was other areas, but we get lumped in it. So let's understand the problem from that perspective, right? So, as I said, I witnessed the activities. However, a paradigm shift occurred when the perceived risk of facing substantial fines made the business unattractive. And while the perceived risk is not truly reflective of the actual risk in the Caribbean, the reality is that risk is at the core of the problem. In addition to the suggestions that have been put forward by the task force, i.e. scaling up the technical assistance capabilities, considering the creation of a new facility to aggregate legitimate flows, I would like to propose a new solution, an insurance product tailored to address this specific challenge, an insurance product. Insurance has traditionally been a way for financial sector to manage real and perceived risk effectively. By having an insurance company assess and price the perceived risk associated with with regulatory and compliance fines, we can develop a risk premium that will establish a ceiling on the maximum cost a correspondent bank may have to pay if they are charged. So the correspondent banks understand, listen to me, I no longer could face $10 million charge. My maximum fee is $1 million. But remember, this never happens. So it's a perceived risk. The size and level of this premium should be conditional on the insurance company's evaluation, some of the stuff that we talked about, evaluation of the institution capabilities, capacity to meet related standards and reporting requirements. Moreover, once established, the funding of this premium, because that's all that matters now, because now you have a premium, you have assessed the risk, and we have come up with a premium. So who pays this premium? Well, we have plenty of individuals who are anxious to help. All the statements that have been made by the Treasury, all right? We are just hearing reparations, money is... Anyone who concerned about the problems of the Caribbean, this is the way to help. So you fund, we get some funding agency to fund the premium. So if Treasury wants to help, all that we do, we come up with a premium, and Treasury pays the premium for the correspondent banks, and voila. This solution does not necessitate the creating of a new institution. Instead, it tackles the heart of the issue by capping the perceived loss. By doing so, we can encourage the larger banks to reconsider their participation in the region. In my mind, it's a win-win situation that safeguards our financial stability and promotes continued economic growth. This insurance-based approach offers a practical and financially feasible solution to the challenges we face. It bridges the gap between perceived risk and the actual risk faced by the Caribbean region, and could be a game changer in terms of revitalizing our correspondent banking relation. By working together to implement this solution, we can strengthen our financial sector, foster economic growth, and ensure a more secure future in the Caribbean region. And who is going to provide the insurance? As I said, this needs to be done by someone who wants to help. The World Bank Insurance Arm, MEGA, the Multilateral Investment Guaranteed Agency, fantastic institution. Let them do the evaluation on the banks. Let them come up with the insurance. Who's going to fund the premium? Our friends at Treasury, all right? Or anyone else, our friends from the United Kingdom, anyone else who wants to help the Caribbean.
So,
We now do that, and now the banks, faced with the risk being eliminated, I expect that the banks will now come back into the market and provide the service as they always did, because it always was financially feasible and profitable. Now that that hatchet of that big cost is now put at a cap that they could now live with, and their value at risk in their calculation will now be eliminated.
well, I'll say two things. One, let's give a round of applause. We love to hear new solutions. You've given us something else to think about today in the private workshops. And the second is, I'm not going to even ask the rest of these questions because I would love to get some reactions from the rest of the panelists. And Patrick, I'll let you go last so you have some time to process. But Wendy, I want to hear from you, and then Baldat really quickly from you as well. And then we'll go to Patrick Dunn on Director LaHunt's proposed solution here.
Yeah, absolutely. I think as is proposed now, certainly an enlightening and very different perspective to what we have been exposed to. There are lots of questions floating around in my head, some of which you've sought to address as well in terms of who bears the additional risk or the additional cost of implementation. We know that these things typically have been filtered to the respondent banks, any additional costs associated with the services provided. And of course, that then filters down to the customer. So in your model, what you're looking at is offsetting the associated cost borne by these risks so that we are again at a level playing field. What I will say is every opportunity for solution is what we will look at discussing today. So I'm really happy that this has come forward. We discuss the aggregator a little later. Most critically, the message that I really want us to walk away from today's session with is that this is not a nice to have solution for the Caribbean region. This is a must happen sooner rather than later for the mere survival of the Caribbean banks and our populations. The ability to trade is critical. We produce nothing. So from a legislative perspective, we know that these things take time. Time is not what we have much of where it comes to finding solutions for these issues. Like we heard earlier, this is a 15-year issue, perhaps longer. And so it is critical that this discussion does not end here today, right? That we really work towards finding a solution that can be implemented while perhaps others are being explored. So be it short-term, mid-term, we must walk away with tangible information today.
Thank you, Wendy. And Baldat, if you want to react quickly to Director LaHunt's proposed solution.
Yeah. So Robert spoke about, the correspondent banks knocking on his doors when he was the treasurer of the bank. And in my time at the bank as well, too, I witnessed the other part as well, too, which was, withdrawal of some of these services. Robert, I think the idea is workable. As a matter of fact, I think I want to propose that we also extend that as well for the concept that we have. If it's a revenue and a profitability issue, from an aggregation standpoint, the numbers are there. We propose to be, to play a positive part as an aggregator and as a respondent bank as well too. That insurance concept can be extended to the respondent bank like ourselves. In addition to the insurance, Robert, there is that uncertainty, and is there, I like your term, this hatchet over the correspondent banks getting fined. So if we can have some clarity and some transparency around that as well too. I know, Patrick, you mentioned that something was out there. That would help as well too. And so beyond or in addition to the insurance concept would be some of these assurances, and guarantees that we, looking to be part of the proposed solution, don't feel and get the hatchet over our bank as trying to propose a solution as well. So, Robert, I agree. This is not about trying to solve for putting someone on Mars. I think it's a very attainable solution, and I do believe with the will that we can easily solve this.
Well, we have the next half of the day to definitely talk through some of the specifics about this and come away with it. Patrick, want to give you an opportunity to react, to talk, think through, is this feasible, right? U.S. Treasury's mentioned multiple times. Is this feasible, do you think, on your end? And how, add an additional question there. The banking forum, we want solutions to come out of it, but it doesn't take just a day to create a solution and implement it. After reacting to Director LaHunt, what does the next step look like? The next step of U.S. Treasury engagement in the region with banks, with regional institutions as well around this issue?
Yeah, no, thanks, Waz. So first off, I just want to state that I personally don't have the power to direct funds, and I wish I did, actually. You had congressmen here who gave remarks. A lot of our funding is tied to what Congress directs us to do. But I'm all for creative solutions and creative proposals and discussing them. I think Robert's proposed solution, the heart of the issue gets to the profitability aspect, right? And the perceived compliance costs, right? What are the regulatory requirements and the perceived potential fines if something goes wrong, right? And I think that's something that we all understand, especially our financial institutions. So what are some ways that we can, from the US government's perspective, lessen some of those burdens, right? What are some ways we can streamline compliance, streamline the regulatory requirements that we issue? That's something that we are looking at. That's something that we put in our de-risking strategy. So again, I think some of the proposals that have come out sort of get to this heart of the correspondent banks. What they're looking at is this business profitable? And what we're trying to do is make our correspondent banks and our US financial institutions take a true risk-based approach, right? When looking at a potential client relationship, right? What we're seeing is de-risking where they sort of indiscriminately, on a broad category, say, we're just not going to touch it. They don't actually take a risk-based approach. They say, this region, we don't want to do it, right? Instead of actually looking at individual client relationships and assessing what the risks are. So that's sort of where we are looking at. I think what's also important, going back to the whole issue of potential fines and sort of supervisory actions that might scare off the industry, I come from a little bit of a different perspective. I think when we have a strong AML-CFT system everywhere in the world, when countries and jurisdictions and the private sector come together to implement strong standards for AML-CFT, that makes our world safer. And I know banks around the world, they don't want illicit finance. They don't want those proceeds, illicit proceeds, going through their banks. And so it is important to get countries on board, right? It's important to get them to implement effective AML-CFT controls. And I think that's, going back to what I said earlier, in the last few years, the Financial Action Task Force, the FATF, has commended some of the Caribbean nations. I think in this last plenary, Don and I were just there in Paris, this last plenary for the FATF. They said that Barbados has now completed its action plan. They have addressed their deficiencies, and there will be an on-site visit to the Barbados. More importantly, I don't know if folks have heard, the Cayman Islands came off the gray list for the FATF, and that shows that these countries are doing their part to make sure that their systems are strong and safe. And what that will also show to the US correspondent banks is that this country is actually effectively implementing AML-CFT. And so this perceived risk of compliance costs or potential fines of if something goes bad, that also gets lessened when countries are implementing effective AML-CFT systems. So I think that's really important to highlight. And the Caribbean region in general, over the last 3-4 years, I've seen tremendous progress, and the FATF has noted that. So I think that's an important point. And then secondly, I think moving forward, what's important here is exchanging these dialogues, but committing to coming back, right? And actually acting on what was discussed previously. And I think I can commit from myself in my office, like, we are here and we want to participate and we want to continue participating. Financial sector de-risking not only affects the Caribbean region, there are other regions, but there are also other types of customers that it affects, including MSBs, including nonprofits and charities. So it's an issue that we are very serious about. So I can just commit to you that we are here and we will continue to be here.
Thank you, Patrick. And we're just about out of time, and I know that everybody in this room will hold you to that commitment, because this will not just be a one-off conversation.
And I just want to also say we have other representatives from the US government here, State Department's here. This is a whole of government approach. Just want
But for now, you're the one that's on stage. But as we get into these later discussions and when we break for the private portion of it, I know this will be a continuous conversation that we have. We have a brand new solution that we will be discussing today on top of the 2 previous topics that we had mentioned. And thank you, Patrick, for sharing the progress. I'm going to pretend to read Wendy's mind and say we just have to make sure that the goalposts that these countries have just reached do not move again. Hearing that from Wendy multiple years now, so hopefully that is not going to be the case. Once again, I want to thank our esteemed panelists for joining us today. Just for the opening session of the Banking Forum, we have much more to come in our private session. Thank you to all of you that have showed up here in person, but specifically to those of you that have joined and watched virtually. Please feel free to reach out to the Atlantic Council or the other partners of the Banking Forum as well if you want to contribute to a lot of these ideas, not just today, but into the future as well. So once again, thank you to everybody and a huge round of applause. So now we will have a quick 10-minute coffee break. And once you return, feel free to use the bathroom. We will then transition to the tables that you see in the back. We have colleagues from the Atlantic Council here that help direct you to whichever table you would like to see. Then we will have our board member, Melanie Chen, come on stage and kick us off. But please feel free to take the next 10 minutes to get coffee, to get food if there's available, and of course use the bathroom. Thank you.